Good morning, everyone. Welcome to our Monday morning trading session. I hope everyone had an enjoyable weekend. I know I did. It was a very nice weekend. Of course, as is the case with all weekends, they never seem to be long enough, do they? All right, so we're looking at the NASDAQ here. And the NASDAQ just opening up, of course, a few moments ago. And looking here at the overnight, you see the market kind of hit the sideways skids a little bit during the overnight session after Friday's rather substantial decline. It's a little bit of an understatement. So we'll see whether or not we're going to get a little bit of a bounce here, whether there's going to be some follow through to the upside today. At the moment, the market's still looking rather bearish, I would say. Just given what's been going on here of late. Oops, sorry folks. Forgot to turn on the screen sharing. Thanks, Tony. Oh my gosh, it's Monday morning. Okay, let's see here. Well, we did get this first micro-macro cross out of the open, which seems to have a little bit of follow through to it. I'm still just trying to get my bearings here out of the gate. Oh, and we're getting a pretty decent little rally there to start. Wow, that's actually pretty good follow through from those opening signals Monday morning and all. Don't tell me the markets are actually starting to come around to how they normally are. Still no real hesitation here on the highs, but definitely a bullish kind of morning, or a bullish kind of start to the morning. Well, when you get a signal like this, oh shoot, they're starting to run away from me again. I was going to say, when the market's in a little bit of a obvious rally mode, oh darn it, the temptation, and it's a good one, is just to get on board anywhere. What's going on here? Yeah, all right, I see. It's me. It's just to hop in anywhere. Ideally, you want to cover below the low of the morning, right? Unfortunately, you really need to take the market back a ways. But you can see we also off the target quite easily as this rally is poised to continue a little bit higher still. And a little bit of a rally coming out of the crude oil market as well. Looking really impressive here on the Hawk with this very nice red bar buy signal. Now this red bar buy is interesting. Now these tend to develop near the end of the trend. But at the end of an uptrend. So this is a very, very short-lived uptrend. Here comes the market, comes back, gives us a red bar buy signal. What's interesting about this one is you could anticipate another retest of the high. It's a little tricky because you could be looking at this and you can say, oh, we already have our retest of the high, but you can see how the market's kind of reacting to the trend line. That's actually fairly bullish. And you can see we had a pretty decent follow through as a result. So whenever you see a signal developing off of a trend line, you can have a little bit more confidence in it. All right, so there. That was pretty aggressive rally actually. Oh come on, give me one more chance here. I'm I'm scanning the other charts and every time I look back I see the market blow past the signal. So let's take a look here at the Raptor. Let's see if they're going to give me a second push opportunity. Oh, the stinkers. I want to try to buy in on this one right here. We're only 10 minutes into the session too. Wow. Nice little trend line touch signal here on the Falcon. Your trend line touch signal is very much like a flag signal, in this case, like a bull flag signal. So whenever it has that kind of shape to it, you can take it with a little bit more confidence. All right, so we're all the way up here now to primary resistance zone. And I'll be looking for a second push on this entry, I think. Wow. I was going to try to draw a trend line across here, but it's... Where's the top? Hmm. All right, so we're somewhere near trend line resistance. And we've got something resembling a little bit of a topping formation. Okay. They've got room to move still to the upside given Friday's rather substantial decline. All right, so here come the sellers now, pressing a little bit. Spoiled that macro pullback signal. If you were looking at this macro pullback signal, wondering why isn't Eric taking that macro pullback signal? Is it not a valid signal? Well, it certainly is. It certainly is a valid signal. The issue I'm having right now is where in the world am I going to cover this trade? Ideally, I want to cover it way back down here, but I can't afford that. So you could, I suppose, you could try to cover below here. That's still very cozy. So I decided just to kind of wait it out. You could also have done a second push on this signal. The second push simply means we allow the signal to engage. And then we allow the market to react to that. Once the market reacts to that signal, then we know the current limit, right? And we can place our entry above there. In that case, you could probably cover the trade down here. Because if the market turns and reverses and enters above that high, well, then you've picked up that momentum that we were lacking. Come on, what's with my computer today? It's not clicking on the charts. They're not moving for me. Okay, I'm a little bit behind the curve here. We've also got a soft edge sell signal here on the Raptor. The soft edge sell must always be preceded by a retest of the highs. In this case, you've got a couple retests. This actually could be considered a retest because this is where the market stopped going higher. This is a very good retest of the high because it actually failed to go higher, and now the market's trying to head lower. Now, again, this is the kind of trade maybe you just want to go in with a onesie. This current bar is what I would consider an opportunity for a second push entry. So you could enter just below the low of the current bar, looking for some renewed momentum. Profit target would be the hard edge. Because the market seems to be very bullish this morning, you probably don't want to go in too heavy. It's probably advisable to go in with a single contract if you're going to try this, and take your profit when you have it. Crude oil also coming down a little bit. All right, so we're short on our trade here. I'll get a stop in play. I'm going to start with the stop above the high. Actually, I may give one more bar to the break even. Way to go, Tony. Tony says he was able to grab that early rally in the queue. Nicely done. He went in with multiple contracts, and now he's just able to sit back and wait for the juicy setups. I love to hear that. I love to hear how you guys are picking up your own trades, Because obviously, here in the trade room, I do spend a fair amount of time not just focusing only on opportunities, but also on the setups themselves. So sometimes we end up missing a couple opportunities. What we're looking for now is for the market to recommit to the short side. That's going to offer us an opportunity to roll our stop in a little bit. Oh, come on, sellers, where'd you go? We we should see the sellers try to knock them down one more time. It's just the way the market flow works. Whether or not they'll be able to keep the buyers down, that remains to be seen. Alrighty. Come on, sellers. Give it a little push. Alright, I think we should be getting another opportunity. No, not yet. Not quite a four-arrow consolidation here. The market is really struggling for trend at this point. All right. My stops didn't roll automatically. I'm just going to bring them down here above the highs. If it fails at this point, it's probably a good spot to get out. All right, maybe I will hold them back. It's nothing worse than getting tagged for a tick or two only to watch the market take off to your profit target. And if there's one thing that I'm guilty of, it's tweaking my stops. Sometimes I just don't leave well enough alone. I try to take the gambling mentality in that, if you've ever played a game of chance roulette or blackjack or whatever, craps, once you put the money down, you can't take that money back, right? That's no longer your money. That's your risk money. Well, this is very similar. Once that money is down, that's the amount I'm prepared to walk away from if this trade does not work out. And I would say at this stage, the market is very much a 50-50 proposition. Obviously, we've got a strong uptrend this morning, so that's in favor of the buyers. But we also have a huge downtrend from Friday, and that's in favor of the sellers. So, decision point. right now. Who is going to control the day, the buyers or the sellers? And here come the buyers again. Ooh, they're trying very hard to rally. All right. Well, it looks like it is turning into another buyer's market today. All right, we're getting a first micro-macro cross near the highs now. Oop, there it is, first micro-macro cross. All right, let's see if I can just sneak it in like so. There we go. Okay, and what I'm going to do is I'm going to try to run this one out a little bit. See if, in fact, we can't get a little bit of follow through, as the buyers seem to be fairly aggressive here today. All right, that's the only current opportunity, so we'll focus on this one. Come on, keep pressing. Let's go. Well, the big move obviously coming early. I can't believe it's only a half hour into the session. My goodness, there's been a lot going on already. Come on, let's go. Keep going. So here with the Raptor, this, if you're going to take this signal, it's just a buy signal. It's not really one of our structured signals. I would consider it because the market has been so bullish today that when the market is in a rally mode, you're looking for really any reason to buy in. Uh, the problem, of course, covering the trade, you should cover here to the hard edge somewhere. But at the moment, the buying still seems very strong. Look at the Geiger counter, just pulled hard over. See how it's stuck there? Almost as though it's broken, just stuck to the buy side. So looking to see some follow through off of that. I, so we've got a couple trades going on here now. And I think I'm going to, is that far enough along that we can go with something a little bit more aggressive. Come on, just a little further. Come on, you stinkers, let's go. A lot of volume coming through on these last few bars. The Falcon's starting to flash some resistance. You can see we've got all these sell dots. That's not a sell signal. It's just suggestive that perhaps there's some resistance coming into the market. And as you can see, we're creeping in on the trend line, so no doubt that will have a little bit of influence on the market. Some sellers will have been waiting for an opportunity to short around there. Okay, so the buyers reclaimed their buying attempts. That's enough for me to take this trade to break even now. After all, if they fail again on the rally, then it's very likely the market's going to reverse. We're almost to our break-even trigger here on the Raptor, so that's since engaged. Russell is asking, what trend line are you referring to? It may be easier to show you here on a time-based chart, Russell, because I really had to roll far back into the history of the Eagle chart to show it to you, or to build it. So hold on one second here. I'm going to build like a, I don't know, 15-minute chart, let's say. Is it going to be big enough to show you? Maybe. Oh yeah, okay, maybe. So I have to scroll all the way back in the Eagle to build a trend line that looks something like this. Oops. No, that's not the same one. Hmm. Yeah, good question, Russell. what what trend line am I referring to? Well, there were some points in the Eagle that were lining up with that. So hold on one second here. Okay, we got tagged on break even on our Raptor trade. We're currently still in the Hawk. Okay, so let me take a look here. All right, bear with me. I don't want to make you guys dizzy. All right, so it's the peak from, so Thursday's close. And I guess it looks like Thursday's high, overnight high. Yeah, so those are just from Thursday's session. I didn't go back as far as I thought, obviously. There's nothing magical about drawing trend lines. I always tend to go for the most obvious. And sometimes to make that easier, it's actually easier to draw a trend line in reverse. So if you're looking, let's say here at the Raptor, um, there's several trend lines you can draw. You can draw a trend line like this. You can draw a trend line like this. People are always saying, well, which is the correct trend line? Well, they're actually both correct. But sometimes, like I say, to make things easier, if you draw your trend line backwards, so you go from here down to here, you'll always focus on the most obvious points. So if the market comes back down here now to this trend line, we can anticipate that other traders are seeing a similar thing and that they'll probably attempt to buy somewhere around here. So if the Raptor or any of our tools comes down, engages the trend line, produces a signal, say around this 4,700 area, that's probably a signal that we could try, knowing that there's going to be other traders getting on board here. I hope that makes sense. All right, so a little bit of a conflict now. See, we got a bearish reaction to that trend line here on the Eagle as sellers are trying to short it. And now we're getting a bullish reaction to this trend line, which is here on the Raptor. Same one as the one I just drew on the Eagle, just the Raptor one I need to adjust slightly. Who's going to win? Don't know. We really don't. That's why we have to look at these signals and we have to gauge them by their probabilities. You know, we try to get a handle on, all right, if we get a buy signal here on the Raptor, what we would be looking for is a double pullback signal. I'm not necessarily going to hop on that first signal. This is a double pullback signal, by the way, that we had back here. So the market comes, for you Raptor traders, the market comes into the cloud, comes out, produces a signal, goes into the cloud, comes out, produces a signal a second time. That's your double pullback signal. Nick, welcome. Nick's a new DTS owner, and Nick's asking, do you usually just watch the NASDAQ or other markets as well? Well, I've got the NASDAQ on this monitor. I'm also watching soybeans and crude oil, but Nick, don't be shy about asking for any market that you're interested in. I'm more than happy to bring up any market that you're following. Personally, I think the NASDAQ, you get a lot of bang for your buck. It's a $5 instrument that allows you, in most cases, to trade multiple contracts, which very often makes trade management a little easier. Soybeans I follow because, well, they tend to trend very well, although you wouldn't know it so much from today's session. Here's the soybean market on the Falcon. Got a little bit of sideways stuff going on. Oh, I guess a slight rally out of the open, but nothing too serious. Nice thing about soybeans is once they settle in, you tend to get a pretty decent move. Well, actually, Friday's session, not a good example either. Here we go. There's a little better. So once they pick a trend, a direction, here's a trend change signal on the Falcon. They've committed to the trend change, and then finally we get a nice little move lower. You can see the rest of this time we're just kind of whipping back and forth a little bit as they struggle for some directionality. And crude oil. Well, crude oil is always a crowd pleaser, isn't it? And crude oil actually fairly active this morning. Here's crude oil on the hawk. So crude oil opening 6 a.m. my time, that's Pacific, 9 a.m. Eastern, came out with the first micro-macro cross. Now that would have been a little bit dicey to take. Why? Well, when you're looking at this chart, it's kind of looking like a sideways range, isn't it? And with a sideways range, we normally anticipate selling to occur kind of in this top quarter or third of the range, and buying to occur down here in the bottom third or quarter of this range. So to get a first micro-macro cross, yes, it's a high probability signal, but you need to cover it somewhere down here where you would anticipate the buying to come back, and unfortunately with my account, I can't afford it, not by risking 2% anyway. So there's the first micro-macro cross, then we come back and we're almost working a macro pullback signal. I'm sure somewhere through here we were producing a buying dot just for a moment or two. Then we slipped into yellow bars, and oh, look at that. We get a red bar buy. Now I showed this red bar buy earlier because it fell so nicely on the trend line, but look at also where the buying is coming in. The bottom third of the trading range, right? So that helps with that red bar buy. You can buy, you can cover it, you can scalp out, or if you decided to trade multiple contracts, or maybe just even leave it on as a runner, you got a very nice progression higher. So this is why context is important, right? I'm always trying to encourage you to focus on more than just the last couple 3 bars that are forming. You have to look back here on the whole left side of the chart. And I suppose that's where drawing trend lines comes in as well. It helps you look at what's been going on back here. Not just what's going on right now. Oh, and while we're looking at that, we got another red bar buy signal. And this one kind of hopped away from us a little bit. We could use the second push on this one to enter. So here's the current high of the bar. You'd want to cover it a little bit deeper, of course, because the trend line support, in case the market engages and tries to come down here to the trend line, this is the third red bar buy, and I'll tell you, we don't normally see a lot of red bar buys within a trend. Come on, let's go. Let's go. So unfortunately, I didn't get this one here on the hash mark. You can see if we had engaged it on the hash mark, we would have hit our profit objective already. Come on. Come on. Get going. Oh, you guys. There we go. So we hit the break even, and hooray for us, we hit our scalp target. All right. Well, that was a profitable little detour. Nick says, I usually watch crude oil and the Russell. The Russell data feed I can't get, but I can get the mid cap, which is like the twin brother to the Russell. So if you ever want to see what the Russell is doing, I can pull up the mid cap for you. The Russell, all the stock indices, however, are more or less going to follow the same pattern. Maybe not tick for tick, but they're certainly all very, very similar. All right, so while we were going over that, we also got another first micro macro cross signal here in the hawk. Nice follow through from there. And signal here in the falcon. And decent follow through from that as well. So remember, with your trend change signal, we have this little pattern. This is the push that changes the trend line color. And we see the sellers try to fight the market back, and then here come the buyers reclaiming the market. That's what makes that a high probability signal. See, we have it down here as well. So here's the push that changes the trend line color. Here's the sellers trying to come back. And then here are the buyers coming through. Very, very much a buyer's market today, though. I think you can almost buy blindly and do okay today, providing your stops are sufficient. All right, so now we're obviously honoring the bullish trend line, not this one, so we'll delete that trend line. Adjust that ever so slightly. Yeah, here's a great comment from Russell, and I don't have numbers for you, Russell, but you're correct. The results are pretty positive. Russell asks, have you done much back testing on the Eagle first signal of the day setup? It seems pretty powerful. The Eagle is one of those tools that I will trust the first signal of the day. The other tools, you know, they're a little bit sometimes too quick to react to stuff, but because the Eagle programming is set up to try to identify emerging trends, you're correct. Very often, you're going to get a signal near the open on the Eagle, and it's going to have some very good follow through. So here was this morning's open. And of course, when the market is in trend mode, you're always going to get decent follow through on the signals, right? It's like 15 years ago, trading was easy, and I'm using air quotes, easy, because the market was always in a rally. Buy it. It was just a question of where are we going to buy it? So that was Friday's open. Here was Thursday's. And you can see all these signals have a decent amount of follow through. In fact, if you wanted to and attempted to ride out the swing, you would have had a little extra profit available to you there. The 7th, what day is that? That was Wednesday. Very, very quiet day. Here's one that did not work out so well. And then here is the Monday, I think it is the 6th, Tuesday, sorry. Monday was the holiday. But no, Russell, you're absolutely correct. And like I said, the Eagle is one of those tools that very often I'll just trust that first signal that comes along. And most times I won't regret it. certainly. Today would have been one of those kinds of days. And the buyer's still pushing along. The rally's slowing somewhat. There's no question about that. Okay, great question here from Nick. Nick's asking if you have time. Well, we always have time for questions, Nick. Could you briefly explain the four charts? All appear to be NASDAQ with different tick values on each chart. What are you looking for in each? Okay, yes. Sorry, for those of you new in the trading room, I should have given you this very quick overview, so I'm glad that Nick asked. These are the four DTS charts. Here in the top left is the Hawk Micro Scalper. Now, the default values for the Hawk Scalper is a 6-tick brick. And we're also running a default 10-tick profit target. So with the Hawk Scalper, we're usually looking for a $50 scalp. All right, here comes a macro pullback signal. So we can try to get on board there. Oops, waited a little bit too long. Let's see if I can get the second push on this one. The signal, of course, printing right down here. I would have preferred the better entry on this one, but the market is slowing somewhat, so I guess we'll settle for the second push. All right, so there's the Hawk Scalper. Here in the top right is the Falcon Swing Trader with a 8-tick brick size, and we're also running a $100 profit objective. Now here on the Falcon, we're currently producing a late filter entry signal. This is one of our high probability signals. And Nick, if you don't have the cheat sheet for the signals, you can email me, and I'll give you my email address in a moment, and I'll provide you with a cheat sheet for each of the birds. The cheat sheet simply outlines the high probability signals. So for instance, here on the Hawk, these are the signals that we're going to be focusing on. All right, these are what we refer to as our high probability setups. You'll hear me talk about that a lot. Now we have a cheat sheet for the Hawk and the Falcon. Unfortunately, I don't have a cheat sheet for the Eagle or the Raptor, but we go over the signals all the time in the room. And of course, feel free to ask if there's something you don't understand. Bottom left is the Eagle Trend Trader, and as the name suggests, it's set up to find trends. The default value is 12 ticks, and we run a $200 profit objective. So in the NASDAQ, that would be 40 ticks. The eagle, we rely on this band very much for our directionality. If your eagle does not have this squiggly red and blue line on it, that's just the ATR strategy running over top, and we're kind of using that as a secondary filter. It's very easy to set up. If yours isn't set up like that, I can certainly show you how to do it. And then the Raptor down here is the latest addition to the DTS family, and it is a hybrid, if you will, of the other trading tools. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one trading bird. So some owners are just trading the Raptors, others are using it as a confirmation tool. But you can see it borrows from the Eagle here. We've got the Eagle band, the bar colors, and signal generation all coming also from the Hawk and the Falcon. All right, so there's your quick overview. All right, so we did hit our profit target here on the Hawk trade. We're still nursing along the Falcon trade. Good morning, Bill. Bill's asking, Eric, can you explain how drawdown is calculated? Well, there's different ways to calculate drawdown. Some traders just use a raw number. Are you referring to the drawdown value in the profit finder, Bill? Because we also have this tool called the profit finder, and I can demo it one day if something's not going on. Okay, no, Bill says it's not the profit finder. The profit finder, just really quick, is a optimization tool. What it does is you can do a lot of back testing in a very short period of time. So what you do essentially is you go through your chart and you tell Profit Finder, excuse me, you tell Profit Finder where you would have bought and sold, and then you can back test certain stop strategies, certain profit objectives, whether you should use a break even, and how these would have affected your profit and loss. Now, in most cases, when people refer to drawdown, they refer to how much did you end up losing on the day, or the week, or the month, or the year. So for instance, let's say we set up a trade like this, and we put our stop right here, and the market came and reversed. Let's say it didn't hit our profit target, reversed and stopped us out, we would have a $360 drawdown. Other traders, when they say drawdown, they refer to how far does the market back up against you before it resumes the trend. So in this case, this would be considered drawdown. Let's see if this tool works here. There. So this would have a drawdown of 14 points. And in case you're wondering what that tool is, that's simply the ruler tool here in Ninja. Oh, sorry, yeah, that's right, 14 points. So you simply click on your bar to activate the bars. See how the bars have all these dots on them? And then you hit your Control F3, and you can draw a line from the high to the low, and that's 14 and a half. You see where it says Y value? So traders would consider that to be drawdown as well. How far does the market move against you? Now, personally, I think of drawdown as the loss, how much you lose. And fortunately, we're always attempting to cap our risk at 2% of our capital. I have a max drawdown of 5% on the day. I like that number. It's a number I'm comfortable with. It's a number I can recover from in a day or two. So I've kind of maxed my drawdown at 5% of my capital, if that makes sense. Oh, I see. Yeah, Bill says he just started with Top Step Trader. Well, good for you. And he says they use drawdown as an indicator of performance. Yes, they would calculate their drawdown by how much you end up losing. They cap their losses. So there's a lot of pressure to perform with Top Step Trader. But yeah, that's how they do theirs. To the best of my knowledge, that's how they calculate their drawdown. That's interesting. Tony says on the Eagle, I don't have hollow bars, even though it's selected. Let's take a look here. So we're looking at the Eagle, and what you're going is down here to the cosmetics, and you want hollow up bars to be true, and then you can apply it and click OK, and you should get hollow bars. If you don't, let Ben know. And I'll give, if anybody ever has tech issues, Ben's the fellow you want to email. That's support@indicatorwarehouse.com. Wow, Bill. Bill says that with Top Step, they seem to have calculated the drawdown a lot higher than it was. He says he had a losing trade. The drawdown was 370-ish, but the drawdown calculation on Ninja was over 900. That doesn't sound right. That doesn't sound right at all. I would inquire. Definitely inquire. Oh, Tony offers some information here. Tony says, in regard to Top Step Trader, he says, if I understand it correctly, there is a cumulative drawdown. So if they collect all your losses, how nice. Not just the one trade. Good morning, Jim. Jim says, I wonder if the sellers are going to show up again. I think so. I don't know if we're going to see any serious selling. The buyers very, very strong today. Sellers might be able to throw the market into a sideways skid. Yeah, Tony makes a post here regarding Top Step. Tony writes, with our type of stop strategies, it's hard to keep in the parameters that Top Step sets for you. Our Colorado friend had real trouble with that for a while. That would be Ray Burke. And you know what? In a way, it's not fair. I know they don't care. they're really, squeezing the performance issue at Top Step. And hey, you know what? They're going to fund your account. They're going to pay you to trade. It's their playground. They can set the rules. But they give you very little room in the way of trade tolerance. Like, a trade like here we're running on the Falcon with this rather aggressive initial stop, even though it's capped at 2%. It's a fairly meaty stop, but all I'm looking for is I'm not looking to take a full stop out. I'm looking for the market to show me that the buyers have shown up again. Well, that's kind of where we're at right now, isn't it? So we know there was some buying going on here, right? Because we got this little swing, this trend line touch, the late filter entry, the push up, market topping out a little bit. Sellers came down, buyers pushed again. Okay, well now I know that the buyers are honoring this whole zone through here, around 47.10 to 47.07. This allows me to bring my stop up. So whereas my initial stop may have been $400, I'm currently running the stop, 125. I could even make it a little tighter if I wanted to be around $100 or something like that. But the point is, had I set up the stop ultra tight, let's say with Top Step, I figure I can only run a $100 stop. It brings me in. All right, let's pretend for a moment here when another couple ticks lower stopped me out. Well, my trade had no chance at all. Yeah, I agree, Stephen, 100%. Stephen says, from what I've seen at Top Step, the traders use small profit targets and trade with more contracts. I think you're absolutely correct there. I think they're really pushing the scalp type mentality. And yet they would be so happy to have somebody there who is not a scalper, because it's hard to follow scalp trades, right? It's hard to tell somebody that, oh, we've got a signal developing, and by the time you get done typing the signal, well, it's already hit its profit target, you're in and out. If you're scalping, for 3 ticks or 5 ticks. Yeah, exactly. Like Steven says, they use 4 to 6 contracts and make less than $175 per trade. Okay, so we're getting a little bit of a reversal type signal here. We'll see if the buyers show up again. I'm anticipating a little bit of a pullback, truth be told. Maybe even down here to the primary support. That would be fairly aggressive, I think, on the seller's part. Yeah, there they go. So we'll see if we get a trend change signal out of that. So now we've kind of fudged this trend line. Pull back to the hard edge certainly seems within reason. That would bring us down here to around the 4,700 area. This is a first micro macro cross signal on the hawk. You would need to cover it above the highs, at least to start, because, hey, the market is in an uptrend. There's no denying that. Come on. Unfortunately, I got tagged here just on the low. I would have much rather preferred to enter below this little swing. I thought I was. The reason I'd like to enter below this little swing is that would kind of confirm that the market is changing direction, at least for the short term. Oh, that's a good question, Bill, and I'm afraid I don't have the answer for you. You may have to, you're going to have to connect with the Top Step people regarding that. Bill asks one more question. The loss was 283 and change. NinjaTrader calculates a max drawdown at 0.63%. Is that 0.63% of the account balance? I would venture a guess and say yes, but like I said, you'll have to double check with them. Bill says that's where I think I'm confused. 0.63% of what? Yeah, good. Bill says I'm emailing them now. Yes, I would too. They're actually they've got good support people as well. You should get an answer right away. I like this. Tony says I was watching the talk program at Top Step and the presenter showed his chart. I stopped counting on the 23rd indicator. I could not follow the presentation, so I shut it off. It's so tempting to think, I have a losing trade because I didn't, account for this, that, or the other thing. Therefore, let me find another new shiny indicator and put it on my chart because that'll help filter out all the bad signals. No, the market, you will never filter out all the bad signals. And there's indicators are good, but you also need to learn to read the price action. Right? You also need to learn to read how is the market responding. Like, look at this trade right now. Okay, so we decided to short. We shorted based on the first micro-macro cross because we know it's a high probability signal. We placed our stop above the swing high to give ourselves a chance. Right? I could have placed my stop right above here. But if we're capping our risk at a certain percentage, why would I keep my stop so tight only to be stopped out before the market potentially moves to my profit objective? Much better to leave a reasonable stop, certainly at least to the macro line, and I could afford the swing high, so why not the swing high? Okay, so the market's trying to head lower. We're working, like I say, a high probability signal. Having a dozen indicators on here is not going to help. Tom Loge, a good trading friend of mine, years ago used to manage a huge bond fund. It was like $30 million bond fund. And at the time, he had 7 monitors going and I think a dozen different indicators. And, he realized the futility of it and he literally stripped his chart clean. Tom didn't even have a moving average on his chart. Actually, I think after a while he did put a moving average line back on. But I remember him telling to me, and this was a little bit of a turning point for me as well, he said, Eric, I'm doing just as well without a single indicator on my chart as I did with following or trying to follow all those indicators. You look at your chart, prices are in an uptrend, right? They're in an uptrend. Prices stop being in an uptrend. How do I know? Well, they stopped being in an uptrend. They're no longer going up. They're trying to go down. So why would I not try to sell? Does this mean prices are going to keep heading lower? Well, no, not necessarily. I don't know that. The market, as I mentioned before, very much in a bit of an uptrend today. But I'm trying to play the probabilities. I'm trying to, play what I see on the chart. And that's really all you can do. What a lot of traders don't realize is that the big institutional traders who we're trading against make money whether the market is going up or down. Traders like you and I, we rely on at least short-term trends. But the institutional traders, some of them are doing the high-frequency trading where they're just trading for micro ticks, grabbing a tick here and there and just trading thousands of contracts. But of course, you can't afford to be wrong for very long when that kind of stuff happens. But then there's also the big traders who are putting on large positions that are, going to run for weeks and months. So do they care whether the market moves against them 20 ticks or 50 ticks or 100 ticks? Well, 100 ticks, they might start to squirm in their seat a little bit, but no. 20 ticks against them in a market like the NASDAQ? Shoot, that's nothing. Speaking of indicators, Bill's asking me about the RSI video that I have on the supportandresistance.com website. And does it work with mean Renko bars? Yes, it does. The thing with adding any indicator, here's the bottom line question. So let's, indicators, there we go. So let's just throw an RSI on here and let's give it like a setting of 21 and I'm going to blank out the average line. Okay. So here is the $64,000 question. Does having this on your chart help you make a decision? If the answer is yes, then by all means, leave it on your chart. For those of you who follow something like RSI, you like to look for failures, you like to look for breakouts from trend lines, you like to follow trend line confirmations, stuff like that. Like this was a nice little confirmation. The RSI bounced, the eagle came up with a signal. So yeah, if that helps you make a decision, by all means, leave it on your chart. Here's a little break, a little confirmation on the eagle that also had some follow through. However, if it gets to the point where you're looking at it and you're saying, oh gosh, I've got an eagle signal, but it's against my RSI and now I don't know what to do, get rid of it because you don't need it. Honestly, you don't need more stuff on your charts. Most people don't need more on their charts. They actually need less. All right, you guys and girls, that's probably a good place to close up the room this morning. So we're going to button things up for now, and I'll see you back tomorrow morning. If you are still following the market this afternoon, it is very much a bull market. So I would be on the alert for more buying opportunities than selling opportunities. All right, we'll talk to you tomorrow. Bye for now.